Hi, it's Tyrone here. Welcome to another video. It's actually Sunday, so I thought I'd try and get this video out before the markets open due to lack of time that I have lately. Right, start with the Aussie CAD. Obviously not trading this, but let's just have a look what's going on. I'm going to enlarge this again just because we know we're in this very long, well-established range. So when it's well established, a range could go on for, you know, it becomes more reliable, I think, after it's been well established to trade. It's the initial start of the range is the best time to try and trade one, looking for the certain setups that I've shown before in the past. But once, let's say, an established range has happened, that's the worst time to try and trade it, because who knows if it's going to stay a range or start a trend, or fake out and whatever else. But once it's well established, there's more chance that this could be here for quite some time, you know, sometimes a few years. And we can see we've got quite an established range going on across here. However, to analyse this deeper, the Aussie CAD is getting on the weaker side. So it's coming down, but we're getting near the low end of this range. So that's why I'm not trading this at the moment. If I was to go long, just so you know, I'll be looking deep into this very deep demand area. I wouldn't be looking to go long until then. And again, as you're probably aware now, I'm slowly sort of introducing what I look at, because you can't just rely on just a supply and demand pattern. You can't just rely on any type of pattern, and you can't just rely 100% on rules. I also look at all the currency pairs, so where they're hitting their levels. So you've got to look at the monthly time frames across all currency pairs, and if most of the dollar pairs are into supply, most of the opposite, the euro, the Aussie, any other pair is into demand, there's a high chance that price is going to reverse, and then you've got to work out which one fit the pattern to trade. So that's what I'm doing. I'm always trying to stick with the trend approach, so I'm not trying to go counter trend, but occasionally there is those contrarian levels that I always take in my personal account, so I like to put them ones out there as well. You know, me trying to stick 100% of the rules, and you probably see this as I go through the last few months, it is very difficult. If I see an opportunity, I've got to take it. And this account obviously is not showing much confidence, from £100 down to 25 with a couple of trades on at the moment. But like I said, it wouldn't have dropped that fast if I was risking 1%, you know. And equally, this can bounce back very, very nicely once I get in these good big trades and ride them out. Before you know it, I'm back up and probably positive. So we'll see how the year still pans out. And I'll just continue doing this just to show the confidence in it. So this is getting weaker. Not going to do nothing until it drops deeper. There is no demand level anyway. There is this area here where we've taken this little area of supply out, but generally it's weak, and I wouldn't be looking long to here. So it's not a very clear currency pair to trade, which is why I've not traded it. The Aussie Swiss, again, well established range. I mean, ignore this stupid wick this broker's done, and I'd be phoning them up if I had some trade and this happened. Anyway, not unless I took profit down here. Got to keep your mouth shut. Anyway, this is definitely again long-term range bound, same as the other Aussie, and it's on its way up at the moment for a pullback. I'm going to leave this on. This is the high of the range at the moment, and this is kind of the low, because this is range bound because of the bounce from here. But it's on its way back up into an area right here, because it is closed down here, of supply. But with the range bound market, unless I think it's going to drop, I wouldn't be trading this. And looking at this, I really don't know. It looks like it wants to continue up a bit higher. So again, I'm not really doing too much on the larger scale on the Aussie pair at the moment. We could drill it down. There is plenty, like I said, lower. If you want to be a day trader and you trade in the 60-minute and lower, I'll be just concentrating on these daily. Wouldn't care what's going on in this higher time frame. For example, nice level here on the daily, and there is room, you can see on the weekly. We are into that monthly level though. But if you're looking for a short-term trade, these are the levels that I look at. The only downside to this level is the fact that we are in a range as well on the daily. Okay, so I wouldn't take that level, but there could be a small bounce. So if price, I'm expecting it to be little bounces to drop a bit deeper before it wanted to continue higher. That's what the range would tell me. But these are the levels that I would look at here for a short-term day trade, stuff like that. But I'm not a day trader. Aussie yen, again the extreme of this range, but the M-shaped pattern is definitely showing weakness. So the chances of reaching this, and it could reach up here because there's nothing in here, no level to stop it. And if we break past this area where we've had a bounce from, nice weekly level here, bounce, if it pushes up, there's a high chance of reaching here because of this, because of the break of this weekly. But also equally there is a possibility that it won't reach that high and it might turn earlier because of the break low of the weakness and this M shape. This is already telling me that, you know, I'd rather look for shorts. So if I was going long, you know, you'd have to manage it a bit aggressively, that was all. So it's kind of one of those, you could play this both ways. Do need a pullback before going short, or a breakout lower on this monthly, and there might be room to drop. It looks like there is room, but wouldn't like to see a weekly trend down, so demand levels in control. I wouldn't, if we poke above this, look to short on the daily, obviously, but anything below this area, if we reach back up and the daily started showing some areas of supply levels, it might be worth for a pullback here to take a short lower. So it's basically a drop, almost a base, maybe slight rally, drop. But if we start taking out weekly supply, I wouldn't be shorting it. Aussie yen, very nice pattern here. I'm watching. I'm always being very careful of the trend line breaks. You know, but there is room. Just because a trend line is broken doesn't mean anything really. But what it does tell me is a lot of other people are watching these trend lines, and when they've all stopped out, a lot of traders start shorting. A lot of traders try and catch the fake out. There's a lot of activity going on here that could get me stopped out and price go my way anyway. So I tend to be a bit careful. But it is the this is the level of demand outside of my normal demand, what I would call an official level, because we've already had a touch and there's been no more closes higher. Having said that, because of this very small spike above, no close above, we are in a range. There's no shadow of a doubt this is range bound, so price could still rally all the way back up to here, or it could be starting as the break of this trend line a downtrend, which means a small rally. It could be a small rally and then a continue down, you know, something like that. I don't really know. I'm only looking at what price could do. So where do I want to be a buyer? Definitely down here, and a seller anytime price starts rallying. So this is the area that could cause that short. Excuse me. Got a frog in my throat here. This is the supply level on the weekly that could cause that to reverse. What we haven't got is a close below this pivot low, so it's not as strong. Okay, it doesn't mean it won't work, it's just not so strong. But this is where it could be any of these levels actually. Price could turn to the low side. But if I'm going to take a long-term trade, definitely buy down here and try and take the target up to somewhere here, managing it aggressively in the upper half, because we don't know what's going to happen on this weekly. So if it's going to just ignore these levels, it will just fly up, which means a nice management on the daily. And if it's going to turn, you'll see lots of stop outs in this area and all sorts of market noise that will confuse the hell out of a lot of people. So personally, you know, it's not the best one to trade. It's as simple as that. You know, there's lots that can happen there. This looks quite nice. We're reaching the upper end into this range bound and pattern. The only thing is, and most experienced traders will know this, when you've got this ascending wedge, it means you might get a little bit of a fake out down here, but price normally wants to break the flat part of the wedge or the triangle. So wherever the support resistance is, in this case the resistance here, tends to break eventually. But I don't look again too deep into that. The fact is that we are up in the top end. Before that could happen, there is plenty of room for it to reach back down like this. So I'll be looking for shorts, and I'd have a target again probably down in this region, but just managing it aggressively when I get down here. So it's all about the profit margin. So what am I going to be looking for in this area? Now I could put an order straight away to short right at the extreme, and then try and catch where price will hit into these wicks quite fast and then drop, which is probably the best bet. Or I look for a level on the weekly. Again, there's nothing really there. You can see there's a massive long range for that monthly, weekly, or you can wait. You can wait for this daily to come up and then make some daily supply levels like this, but in reverse. Or you could look at the 240 minute when it gets a bit higher and starts producing some levels like this, and then this if it drops and pulls back. The thing is, when you're starting to look on a monthly time frame, these ranges, it's best to stick to a daily. You're not going to get so many false signals. Downside, you could miss it. So the best point after that analysis is to just literally short this area, which is what I'm going to do now. I'm going to put a short on this CAD. I'm just going to pull, and I can't put the order on obviously because the market is closed. I'm trying to do it, but this is the the price I would try and get in. If we look at the high, we're looking at high of this high point of the range there, or the triangle, is 7956. So my stop 7976, 20 pips above, and I'm trying to get in at about 7916. Okay, which is, if we move this over, so I'm giving myself about 60 odd pips. So around this area, so upper end of these wicks. So if we do spike up, I'm more than happy to take a 60 pip stop here for the potential. Bearing in mind you've got the potential of reaching about 500 odd pips. Okay, potentially, quite easily. So that'll be an order that I'll put in when the market's open tonight. So watch that one on the CAD Swiss, CAD Yen. Moving up, again this is showing weakness. We are moving up. Could be a big range still, could still be a big range. This could be the lower of the range, and it's got plenty of room to rally up to here. Again though, we've also closed above two weekly supply levels, or so we closed. We haven't closed quite close. Yes, we have. We closed above now this area, although we've not had a close above any of the recent wicks. So this could be starting to roll over as well. This, the most recent price action is not showing much strength. Okay, it's dying out. So it could start to drop like this, which means targets on the downside could potentially reach down these sort of areas. So there's plenty of profit margin, more to the downside, but there is profit margin to the upside. But we're in the middle of the move. I wouldn't be trying to buy this at the moment. I want to wait now, just on that knowledge, to see where price goes. If price rallies into this area, I'm going to look to short. And again, this is all long-term trading. And if price starts to roll over, and maybe we start to, from this area, start to break this low here, creating some daily or even 240 minute supply levels, don't know, maybe trying to short this down to this area on the CAD. So the CAD Swiss is looking weak, so that you can see the confluence here. The CAD Yen is possibly going to look weak if this gives me the information this week. It's already showing it on the weekly that we're pausing. So basically in my head I've got the CAD could be getting weak, so I'm trying to find some confluence when I'm looking through some of these cross pairs. So when I look at the Aussie CAD, for example, I know the CAD could still get weak. So if the CAD gets weaker, I mean at the moment the Aussie's getting weaker, the Aussie could get stronger. So if the CAD does start to get weak, the Aussie here against the CAD may well start to rally. It may drop a little bit more and then rally. So, you know, we get into them areas as well. We're getting a low point. So who knows what could happen. It's just that I'm looking at the CAD getting weaker and anything against it. Let's have a look at the Euro CAD. If the CAD's getting weaker, the Euro may get stronger. Again, fantastic looking here. The Euro is in demand, and the CAD, like I said, looks like it wants to get weaker. So if this does bounce, it's going to help the CAD weakness, especially if the other cross pairs against the CAD start getting stronger. So I'm looking at there's nothing to trade at the moment on levels on the daily or the weekly. They're all down. Everything's pointing down except we're into monthly demand. So I'm only looking to go long on this Euro CAD, but it hasn't happened yet. So this is like catching extreme turning points. The Euro Swiss, again hitting this big support slash resistance. We can see that's been there for that intervention back there from the old Swissy. So let's just see what happens on this. You know, we've got a flag pattern here. There's not much I can really read into this. I just need to see on the bigger time frame what it wants to do. Not really liking it. I'm hoping it bounces to the downside. There's lots of room down. Going up, who knows where it's going to go. Euro pound, again, there's no direction on the monthly. It's more like a flag pattern, an unusual one, drop and a flag to the downside. But if we're looking at the general pattern, there is still a little bit of room to come up, just a little bit, before it wants to drop a bit lower again, if it wants to, or it might continue higher. That's what it's looking at. Nothing to really trade on the higher time frame. Lower time frame would be in a short right now because we've taken out these levels, but for a target down here, you see, not big targets, you can't rely on it going any further. Euro yen showing weakness. We've got this level here. It looks like it was trying to roll over already. We've got supply and control. The big picture is definitely up. We can see that, but that doesn't mean nothing to me because we're so far away from the trend line. There's plenty of room to drop, and it looks like it wants to get weaker. Having said that, we have got this area of demand on the weekly, and we've not really got a close above, but this is almost causing a potential range in this area because of the potential start of a range. If we don't see how low this has gone to this pivot low, I'll be looking to short here for a target down here if we don't take out this low here. When I see a range pattern set up, if we don't fake out, there's a high chance that price will, as long as it comes straight up with no levels, bounce from this area down to here before deciding where it wants to go. It could then continue higher, it could continue lower, it could continue ranging. That's the first shot. This is a range set up for me before anyone notices it's a range, because we've taken out this area of supply. We've not closed above, but we've taken it out, and we've not taken out this rubbish area demand yet. So if price rallies, I will short up here at the extreme, hoping that it will reach very similar, roughly about 30 pips before the extreme, so about 50 pips in, with maybe a 70 pip stop coming down for, it's only about 250 pips, so I might just tighten it up a little bit, but looking for a 5 to 1 there, something like that. Euro New Zealand, again, detailed analysis this one, but again, look, flag pattern style range. I'm looking for a direction on this. I'm not really interested in trading. It's been here too many times to sort of take a gamble with a count this low. Euro dollar, this is the one I'm in now. I was talking about, I had a stop out. Let's just come out to the daily. This level here, I took a chance, gamble. It stopped. I said I watched this level, and what I was watching for was more of a confirmation, which I got. When price dropped into this level here, I drilled down to the 240. Because of where we are on the dollar index and also the euro dollar, into this level of supply and into this weekly level, into the level of demand and weekly demand here, counter trend, but it's within this monthly trend within the timing rule as well. So what I was looking for is 240 minute, and I'm going to enlarge this. And what we had here was, this is the first indication. Obviously got a hammer. We started, no closes above, but we started rallying. But I was looking at the time, this was a New York rally. The London stopped it dropping any further. New York rallied. It came down during the night. 4 in the morning, had a little rally. Then we pretty much, again, similar pattern down here, like a hammer, doji start on the London. New York took it up and closed above all this. So therefore I put a order in, price dropped. My stop was below this level down here, this whole level area, as you can see. That doesn't mean it's going to work, by the way. So I've got about a 70 pip, expecting price to rally into the 4, 5, 600s, possibly higher. You know, it's got the potential to reach this area on the big picture on the monthly. Has got the potential. So I've got no targeting. I just want to see how this one plays out. And look, a very nice candlestick formation on the weekly. You know, this is weakness. Sorry, this is strength here. So it's showing prices dropped and closed. Doesn't mean it's going to work. Could be a drop, a base, and a drop, and drop even deeper. Hence an order down here. So we've got another level on the 240-minute formed. I just want to see what the time is of this. 8 o'clock again, and London and New York pushing up. I like to get down in these extreme areas because the further down you are, the less chance of being stopped out with a fake out. That's all that is. So we are coming into the level now on the daily, a very nice level of demand. If you want to look at it this way, for those that are intraday trading, although the probability is getting lower after extreme drop, but then, you know, nevertheless it could continue. So this would be short for a target down in this area. You see where the stop is? It's well below the closed candles. So, you know, that would be your day trade, bang, and then it might continue up, or it might continue much lower, getting me stopped out. Pound yen. This is that supply level I talked about. Remember I said, going back, you can go back now months, talking about this supply level. Once we closed here, breaking this demand level, rally base, small one rally, but it was a close above. So this was a strong point to short. Price has hit that area and dropped. There was nothing decent. You had a wicky area where it's reacted from on the daily, as you can see here, but I wouldn't have took that. But there we go, that's what it's reacted from, a counter trend daily. And if I was to look into that area, actually, just for learning purposes, we can have a look to see what time that level was formed. And this was actually, oh, look at that, this was 4 o'clock, 8 o'clock in the UK, so it was kind of like the around the end of the US close. But nevertheless, this level right here worked amazing, but it was not a London/New York, so I wouldn't have taken it. Had a bounce already here, price never got near it. In fact, it reacted more from this right here. So let's have a look at what time that was formed. And again, that was New York afternoon session that took that down. Not the levels that I would have personally traded, so I stay away from them. But you can see they work. You know, you can't take 100% gospel for all rules, but in my experience, I like to stick to the London and New York levels. So that took that all the way down very, very nicely, very, very nicely. And now we've got to see what's going to happen here. We're into a beautiful area to go long. We are into an area, just because we've shorted this level here, supply is in control, we're well away from it, and we're into a pattern that does say we are getting stronger on the monthly. It could well bounce from this area, so this isn't a bad area that if anybody took it to trade the weekly, to sort of target to the 3, 4, 500 potentially. Again, aggressive management. If you start to get over 250 pips, I'd start to manage it aggressively, because monthly supply is in control. Personally, I'd rather wait for the break of this level for a pullback into a weekly supply or daily supply, because of the monthly supply levels in control. Pound dollar hitting this nice demand level. Too many candles here, but nevertheless demand is in control, not the strongest, but price is into an area, and I did map this level out. I wasn't going to trade it based on the fact that the timing's slightly out here, but I'm watching it. It's counter trend for the weekly, counter trend on the daily, it's a contrarian, but with the monthly. This is trying to catch these turning points. Again, the reason I like this level, if we come back on the 240, right here's a London based strong candle, and we've got a New York one at the extreme here. So this is why this level's having a lot of activity, because of the time. What I don't like about it is the fact I was watching the euro pound. I'll come back to that very quickly. The euro pound, because I like the euro a little bit better. Is that the euro looks like it could get a little bit more room based on this to the upside, you know, with the wicks, which means the pound could drop a little bit more, or it's going to stay here a little bit longer before turning. And that is why I took that euro dollar trade, because it looks like I'd rather get ahead on the euro and not get stopped out. Let's go on to New Zealand dollar. Expanded range, price could still drop down to here. It's also, if you look at it, turned from an expanded range now kind of either into a range with the upper end being up here, and now we have the lower end down here, so it could bounce from this area and back up again. So look for longs down here at the extreme. Dollar CAD, it looks like it's rolling over again, a pattern here. This area is in control at the moment, right down here. There's no recent or decent supply demand recently, and I was looking at price possibly reaching up here. It's already moved up already this far, potentially reaching up to here before reversing, which is touching the trend line, and it is a based on these candlesticks, a range bound pattern. So I'm just going to draw that in. This was a level to watch for a potential short, but it was in the middle of that range. I already had a short on here and it got stopped out for the fact that I said this is probably going to be range bound. That was what it was showing me. So I'm a bit scrappy, so I'm going to stay away from that. Now the dollar Swiss could be a fake out, could still work this monthly level, could be just a little bit of a fake out. Price hasn't closed there. Very strong shorting or weakness on the weekly, and again we've got levels here on the 240. That was another reason why I was going long on that euro, because the levels were formed on the dollar Swiss. Another opportunity here, although I don't like the second opportunity is to get in unless you're going to have your stop right above the high. And dollar yen, it's into a sort of in the middle of this range here, so there's a weekly here, potential for shorts. So I'd have to manage it aggressively if you was to short this, but I don't like being in the middle of this monthly. Now if I come over to the let's have a look at the dollar index here. I just want to point this one out on the dollar index. Final touch to why I'm like this euro dollar, because it's the biggest basket in that currency in the dollar index. So let's have a little look at the monthly on the dollar index into this supply area. So the dollar looks like it wants to short. The weekly again, it's got that shooting star, and the daily, we're into daily demand now, so it could still bounce, which is why I like to be going long at the extreme of that euro, so to speak, and obviously you'd have to go short at the extreme up here. If I go to a 5-hour chart, you can see all these levels up. You can see the difference now. So we had the basically supply was in control on this 240-minute or 5-hour chart. So as soon as I saw that weakness started to close, I put that order in on that euro dollar, and hopefully going for a very big target. I'm going to come back to that one because this is what I'm looking for the trade of the year. I've been talking about this last month. I've been stopped out, so if I do get in now, looking for nice rally. There is the potential definitely to reach up to these areas, 300, 400, 500 pips, where again I'll have to assess the weekly and the daily as the trade management to see if it can go up to this sort of area. And that's it guys, thanks for watching. A bit more detailed analysis there for you. Thanks for subscribing and safe trading.